All right. Hey guys, welcome back to We Talk Money. This is the first show of 2022. Welcome
Oh,
back. What's up, guys? Got
Hey, hey.
Nikki, certified financial planner, Travis, former hedge fund investor turned retail to the dark side. How you guys doing?
Fantastic.
I mean, the
All
markets
right. Well,
are moving, so we're good. We're happy campers.
yeah, if you didn't know any better, you'd think the world is coming to an end based on Twitter and market sentiment right now. People are just losing their minds. There's a lot of fear out there. The fear index in crypto is at a multi-year high. You've got a lot of stocks that are in deep, deep drawdowns. You've got inflation fears that are at all-time highs or multi-decade highs. Let's just go ahead and jump into it. I know there's a ton to cover since our last show. And let's just start by looking at kind of the broad markets. So as you can see, NASDAQ a little bit off the all-time highs, but still kind of, not anywhere deep as the March 2020 panic. If we take a look at Bitcoin, which we'll dive into the crypto charts in a lot of detail, we're actually significantly off of the all-time highs, and we're in a really, really big choppy range. So I know a lot of people have questions about the Bitcoin chart that we'll go into detail with and talk about some possibilities and probabilities there. But before we do that, Nick, why don't you just give a little blurb for our sponsor, Y Charts?
Yeah, so this show is sponsored by our friends at Y Charts. I'm a huge user of Y Charts for all my fundamental analysis, even some technical analysis. I use them for looking at economic data, and I'm pretty much addicted to the platform. If you're a retail investor or an advisor, it's a really useful platform. I suggest checking it out, or go to ycharts.com. Tell them We Talk Money sent you, and you will get 15% off of your first subscription.
Sweet. All right. Well, with that said, let's jump into the charts. Let's analyze some data. And why don't we just start, I guess, Travis, give us a 30,000 foot overview of what's happened. We're into the second week of 2022. And after having three massive years, a lot of the markets are flashing red. And why don't we do this? Let's just give a little bit of context. Let's just look at I think it's always interesting to zoom really, really far out. And if we look at the NASDAQ, going back to the early 2000s, looking at the futures markets here, you can see 2019, 2020, and 2021 were all three just really massive years. And we're showing a little bit of red on the 2022 candle. And if you weren't aware of like this perspective of, the markets are still close to all-time highs, and if you just watch the news and listen to market sentiment, I would think that the world is completely ending. I mean, there's so much panic and fear out there. So Trav, what's been happening? What do you make of this? And where should we start by looking at all this data that has come out over the past few weeks?
Yeah, like you said, if this is markets in turmoil, I don't want to know what it's going to look like if we have another 20% correction in stocks. But, the basic gist is that the world is finally coming around to our view, which we laid out, I think, as early as like February or March last year. In fact, I think one of our podcast episodes in early March of 2021 is inflation about to wreck markets? And now it's become very consensus that inflation is a problem, that the levels of inflation are a problem. We've got bond yields ripping since the start of the year. They're up about 25 to 30 basis points on the 10-year, the 5-year, and the 30-year. So markets are finally waking up. Bond markets are finally waking up to this idea that we're probably going to get some rate hikes this year. The Fed is obviously, tapering its asset purchases down. And so a lot of market participants are wondering, well, what does that mean for the overall economic cycle? What does that mean for stocks? Can stocks, still go up, or are we going to be in a situation where the market's going to be under pressure? We've already started to see rotations within the market itself. So even though it looks like the NASDAQ and the S&P aren't, down all that much, down, I think anywhere from 3 to 5% to start the, the first 10 days of the year, we do have a big shift in what sectors are performing well and which ones are performing poorly. Obviously, tech stocks and stocks that had high valuations over the last few years have been the hardest hit. We've seen tremendous drawdowns in those areas of the market. We've seen, as you can see here on the spreadsheet, a lot of big name tech stocks down anywhere from 30 to 75% over the last 3 months. Big names. We're talking about, names that were previous darlings like DocuSign and Cloudflare and Affirm and Asana and Snowflake. And in addition to all the other ones that have been correcting that are, some of the pandemic winners like Peloton, Zoom, Teladoc, et cetera. So there's been a lot of carnage. And, that's why people are, I think, have freaked out a little bit. But we've also seen some positive performances in sectors like financials, which could benefit from higher interest rates. If you look at the XLF ETF, you can see that. We've seen pretty positive performance out of energy for the first time in years. So financials and energy and value stocks are starting to get some of the, rotation out of tech into those sectors, which is helping those sectors. So the sentiment that I've seen about stocks on Twitter is that, tech is dead, high valuation stocks are dead, growth stocks are dead, and it's all going to be about financials and energy and value stocks this year. Now, my opinion is I don't think it's going to be that simple. Even though we laid out
never is.
No, it never is. It never is. And by the way, even in the .com bust and in time periods where you had, massive sell-offs in the overall market and massive sell-offs in tech, you still had, I think 10 or 15 massive bounces within those downtrends where the market was up 10 to 20% in a matter of weeks. And so even if we end up in a grinding bear market in those sectors, there's going to be a lot of trade opportunities along the way. And, some of those companies are still going to come out of that and do just fine over a longer term time frame. So again, I don't think it's that simple. I don't think it's a story that financials and energy are going to be the only winners this year. But like we were saying from last year, I think you have to be careful about where you pick your spots and the valuations you pay. And it's going to be interesting to watch how the data plays out on inflation throughout the year.
Well said. We've also got another spreadsheet that I wanted to pull up here. So for you guys watching the video, we've got a document just showing, the deepest drawdowns. And you can see a lot of these are really large cap, deca-billion-dollar companies that are in deep drawdowns. And then, Trav, why don't you explain this one? This is what you call your falling knife tracker. What are you looking for here? What does this data show us? And how can you use this to maybe make some return?
Yeah, so I initially put this together for the members of our Skill Incubator community. And the idea is that we want to sift through a lot of the wreckage of all these stocks that have had massive drawdowns and try to find some diamonds in the rough, so to speak. We want to find companies that, control their own destiny because they're already profitable. They're not going to have to raise a bunch of capital at low share prices and dilute you. They are now trading at reasonable valuation multiples when you look at their, EV to gross profit, or maybe EV to EBITDA or market cap to free cash flow types of valuation multiples. We like low numbers there, obviously. And we like companies that can continue to grow at 15, 20, 25% growth rates, even in this type of environment. So I put together this spreadsheet to kind of look at some of those companies that fit that criteria, where they're trading now at more reasonable multiples. They are, in some cases or in many cases on this list, profitable. And then how do we compare those against one another? How do we benchmark them? So I can sort by, the different valuation multiples, or by other criteria like who's generating the most cash flows and things like that. And so this is just a way for us to try to pick out, again, some of the diamonds in the rough and try to find the opportunities. A good example would be, Bark. Bark was at the very top of the list in terms of cheapness. It's a de-SPAC, a very hated sector of the market. But, Bark has been actually delivering pretty good numbers over the last couple of quarters that it's reported. The stock's down 65, 70% since the de-SPAC. But, today it's up 30%. And we had alerted it to the community last week because it had gotten so cheap. And we thought, there's definitely some catalysts for them to grow this year as they're entering some new markets. Still, the company, still growing over 30% a year. And stock is just very washed out. And so we identified that when I even spoke about it on a free public stream that I did on my YouTube channel on Friday last week. But they actually came out and today at a conference said that the fourth quarter, the numbers look good. They're up 33% year over year on revenue growth. And you've got the founder CEO returning to the CEO role. So it's small positive catalysts like that. When combined with such a beaten up stock where the sentiment is washed out, where you can find these opportunities to all of a sudden get, pretty massive gains. And so I guess the point is, you got to do the work, but if you know where to look, there's going to be opportunities within these, market sell-offs to find stuff that is, kind of unduly punished. So.
Oops, looks like my mic
I
was cut off there. Oops.
I was like, is it you or me?
No, it's definitely me. I had it on mute. Anyway, I was asking, for you, is it something that you're also interested in going dumpster diving and looking for opportunity, or how are you looking at the markets right now?
I missed who you asked that question to, if it was Trevor or me.
That's for you.
That's for me. Okay. Yeah. I am of the mindset that we are in dumpster diving territory for sure. I mean, when you have market darlings that are down 50% plus, that's pretty astonishing. And when you have sentiment shift in this way, kind of like we saw back in December of 2018, when the Fed was raising rates and the market kind of took a dump and we saw a lot of fear, that was an opportune time. March 2020, things looked very grim. That was an opportune time. I think even though the broad market index is not down a lot, we have not seen a very deep correction in the broad market, the S&P and the NASDAQ, in my opinion. I think that we still could see a much deeper correction. And even though we haven't seen that correction, there's a lot of fear out there. And if you, like Travis did, where he, dove through all those individual names, that's the tricky thing when you've got the broad market up, but turmoil within individual stocks, you wouldn't really know by just looking at the market on its own. So I think that right now is definitely a time to be paying attention. And even though it may not feel good to be buying stocks right now, it actually, we were talking about this in the community recently, how right now some of these buys are feeling, pretty scary. And usually when that's the case, same thing in Bitcoin right now. Bitcoin's been selling off. People are probably afraid to dip their toe into that. These are the times where we need to be working and we need to be researching and we need to be paying close attention. So I'm right there with Travis. And also something to consider is we're still expected to see earnings growth for our corporations for 2022. It was forecasted to be around 9% earnings growth for 2022. With this Omicron stuff, I don't know. That's probably going to come in a little bit, but we're still expected to see positive growth. Really, the question for me, is more so with the broad market. I'm not so much concerned with the individual stocks, because there's opportunity there in stocks that aren't the top 10 big tech stocks that I'm excited about. But when it comes to the broad market, and I get this question a lot, like, what is the market going to do? Because a lot of people are passive indexers. And this is kind of where passive indexing, it's been kind of difficult to predict what's going to happen with the markets, with the Fed, raising interest rates, with inflation going haywire. While we're still trying to recover from a pandemic, we still expect growth, earnings growth. So there are a lot of things that are kind of at play, and it's difficult to fully predict what's going to happen with the broad market. But what I am thinking is any corrections that we see from here, I just am not convinced that I'm not fully convinced with inflation and with real rates being negative that there's going to be less of a demand for equities. So I do still think that corrections are going to be bought up pretty quick. I think people are going to be buying the dips fiercely still, unless the Fed really gets aggressive with raising rates, which is possible, but is it going to be enough? So those are just kind of the things that have been going through my head when it comes to how to quote unquote anticipate where to go from here and how to position a portfolio from here. I think the key is still diversification. We've seen that. We've seen financials and energy up while technology and consumer discretionary is down. Things like that are happening. So I think it just speaks to continuing to be diversified. If you are actively investing, go dumpster diving right now, because there's a lot of opportunity out there. And I also think that we're going to see a shift in market environment eventually, where a lot of these beaten down stocks bring trading opportunities.
Well said. Yeah. And I think it's interesting, like you said, back in 2018, the S&P had call it a 20% correction, which that was a V bottom, awesome buying opportunity. And then the March 2020 crash, when the COVID fears hit, I was down about 35% from the all-time highs. And then here we are right now, kind of starting the year off, and the S&P is down barely 5% or so. So even though there's extreme levels of fear right now, the markets really aren't reflecting that on a broad basis. It's more so like individual stocks. A lot of the meme stocks and some of the high flyers from the past 2 years have gotten hit the hardest. And I think that's a good time to kind of look at Bitcoin and talk about crypto as well, because there have been some bloodbaths. There have been a lot of confusion and just a lot of people going, I'm not really sure what to do right now. If we take a look at today, which is the 11th of January, the markets are up, 4 or 5% in crypto across the board of a lot of the large caps. But on the week, they're down, 8 to 10%. On the month, about 10 to 15%, but they're still up quite a bit over the past year. And so obviously we've had some massive growth in crypto over the past 2 or 3 years. If we look at a yearly chart, you can see from the lows of 2019, we had a massive year in 2020 and then another really big year in 2021. And there's kind of a self-fulfilling prophecy that I think some people might be trying to front run, which is that after, historically, and this kind of goes hand in hand somewhat with the halving cycle. After 3 or 4 green years, you typically see a red year. And so I think a lot of people are looking at this going, okay, are we going to get another 70, 80% pullback in Bitcoin, or is this time different, right? Is there going to be maybe a 4th year again of another big green year? Or is this the start of an extended bear market? And right now, just based on the daily chart, it's pretty hard to determine that. When we look at, some on-chain data and some fundamental analysis, there's still a lot of information supporting the idea that whales and hodlers are just gobbling up the supply. So it doesn't feel like, late 2017 or early 2018 when the markets went parabolic, we had a tweezer top and the markets were down massively over the last year. Same thing happened in 2013 to 2014. But as of right now, we actually haven't seen that parabolic blow off top in Bitcoin. There was a lot of expectation of that to happen in Q4 of last year. And I think what happened is that became a crowded trade. And a lot of people were looking at the stock to flow model and looking for mid, 6-figure prices. And it kind of got priced in. Again, it got kind of crowded, which created this volatility. So for you guys watching the video, we're taking a look at basically the last year of Bitcoin, just doing a kind of a quick recap here. We had a massive breakout that started in the fall of 2020 and really had a very clean and clear bull market that led us from about the 10K price zone up to about 60 to 65K. And then the first sign of weakness actually came here in May of last year, 2021, where we had a head and shoulders that broke and price was down about 55% from the all-time highs and then quickly recovered, right? So we have kind of this really big range. We have support at 30K, resistance up around 70K. And this market has been much more difficult for traders because it is range bound, because it has been choppy, because there have been a lot of short squeezes, a lot of all-time high traps, and we've just seen a lot of range bound trading action in Bitcoin and some of the majors like Ethereum and Solana. And we've also seen a lot of smaller caps get absolutely decimated. There's quite a few alts that are down, again, 70, 80, 90%. That's why we always say, like, Bitcoin is the DJ that determines how long the crypto party goes on. And when things start to get shaky in Bitcoin, alts are the first thing to really let go. And that's why we always say, like, it's best, the way that we look at it, I feel like it's best to trade altcoins to accumulate more fiat dollars so you can accumulate more Bitcoin and maybe a few other key crypto projects. But people that throw, a massive majority of their net worth into highly volatile shitcoins or just altcoins or NFTs or whatever, they're the ones that experience the most pain during bear markets because the smaller cap alts have the highest volatility. Yeah, sure. In a bull market, you'll see much bigger percentage gains in alts compared to Bitcoin. But in bear markets or choppy time frames, you'll also get the deepest drawdowns. And so that's why being strategic and really thinking about risk management is so important. That's why back in the spring here, I really started to de-risk a lot of my alt positions, took a lot of profit off the table, and actually started to build back into positions late last year. And now I'm sitting in some drawdowns because price is choppy. And that's just part of the markets, right? You're not always going to be in the green. And if you're holding for extended periods of time, especially in Bitcoin and crypto, you have to be comfortable sitting through deep drawdowns. That's the nature of these markets. And that's the kind of, I guess, the risk that comes with being in the best performing asset over the past decade. So I don't know. Does that make sense, guys?
Yeah, it's actually, it's interesting. You mentioned volatility. And I think one of the things that kind of illustrates this as well is like, if you look at something like ARK, ARKK, the flagship ARK fund, on the equity side, you can see how, it all looks great when things are going well, but there's even more value destruction once things get volatile. So, ARK is now down, I think 45% on a 1-year basis, but because so many people got in when it was near its top, you can actually, if you pull up that tweet, actually, I believe it's that one there, you can see that ARKK has actually destroyed value in aggregate now because so many investors got in, near that top after the craziest run of performance had already been had by ARK. And then so many people piled in at the wrong possible time at the top. And then that volatility created a lot of sell-offs in ARK's individual positions and in the ARK fund as a whole. So now your overall dollars invested in ARK are down on an aggregate basis, with the ETF actually down about 45% on a 1-year basis. So that kind of shows you the volatility tax, and maybe, I don't know if you call it a stupidity tax, but basically, when you pile into very volatile assets, especially at the wrong time, that can end up leading to a lot of really bad decisions and a lot of really just poor performance on a subsequent basis. And so, it's not to say that you should be in the most low risk, low volatility assets all the time. But what it does mean is you have to be particularly careful about, when you get into volatile assets and assets that have the potential to swing, 50% in a given year. You've got to be thoughtful about how you position size and about how you, again, enter and exit those types of assets. So it's not crypto, obviously, but it's actually, I think, relevant to what you were just talking about with the volatility tax.
I have a question.
Yeah, I mean, it's the same thing that happens in Bitcoin, right? Is like you have a good performing asset that hits the news, and then a lot of chasers, people late to the game, will pile in at the top and then sell the bottom, right? So that's why I always say it's like everybody knows inherently buy low, sell high, but there's a reason why most people do the exact opposite and why most people underperform the markets.
Yeah. I did want to bring something up real quickly. So one thing about Bitcoin, we know with growth stocks that as interest rates rise, we expect growth stocks to take a hit. That's the natural way that it works when you're putting in the discount rate, and valuations essentially get compressed. With Bitcoin, we've seen Bitcoin rise during a low interest rate environment. And something that was just kind of popped in my brain, thought it might be a good conversation, is what happens with Bitcoin when interest rates are rising. I would imagine it's going to be the same idea. A lot of people are going to take some risk off the table. They don't maybe have to be in such high risk assets to get something for their money. Not that I'm saying the Fed is going to raise interest rates enough for it to really put a big dent, but I've been thinking about that. What does that look like with Bitcoin kind of rising during a super low rate environment?
Chris, I know you and I had looked about 2 or 3 years ago. We did a video looking at Bitcoin's correlation to stocks on a pretty, in-depth basis. And one of the things that we had noticed was Bitcoin had a number of periods where it was actually uncorrelated to stocks, which was a very attractive property of Bitcoin and of crypto. But I should say, as a follow-up, one thing I have noticed is just in the past few months, that correlation has picked up. And so we have seen Bitcoin and crypto overall become more correlated to things like the NASDAQ and tech stocks in the short run. Now, that correlation can obviously change again over time. But that is one thing that concerns me a little bit about crypto in the short run, is that correlation has picked up to some of the more sensitive parts of the market. And so that does kind of beg the question of, could Bitcoin get taken down if, tech stocks and the NASDAQ correct further this year? Say the NASDAQ's down 10 or 15% this year as a whole. What will that mean, for crypto and for Bitcoin? Will that mean it drags it down with it? And I think that's a possibility. But if we can see a decoupling again of that correlation, that would be a very positive signal for crypto. So TBD on that. But I do want to say the data just in the past couple of months has indicated a rising correlation between Bitcoin and tech.
Yeah, and absolutely. I mean, that's what we want to see, right? Is Bitcoin becoming an uncorrelated asset. But just like what we saw in March of 2020, where when we had the panic in stocks, we also had a similar panic in Bitcoin. Now, that actually turned out to be the best buying opportunity for Bitcoin. So Personally, I love market panics. I love when there's irrational fear and when things get really overextended to the downside, because that creates really the most profitable time to participate in Bitcoin. But one thing I do want to kind of talk about is the fact that Bitcoin was born right about here on the stock market. So literally at the depths of the 2008 financial crisis, this is where Bitcoin was born. And so Bitcoin has not lived through a true stock market bear market. So it's yet to be seen. Now, I could make a bear case argument and a bull case argument for both sides of the coin, right? Why it could actually do better in a stock market bear market. But I think initially what would happen is, let's say that we did get a really deep pullback this year sometime. I think that initial shock would cause a deeper pullback for Bitcoin. Now, also just putting in context where we are, like Bitcoin, even though it's down from the all-time highs, I mean, if you put it in context of the last decade or so, I mean, it's still up massively, right? So if we did get a panic, I would be just excited for looking for, deep value buys where I can buy for my long-term capital buckets and then maybe even get some bounce plays for some short-term trades. But yeah, I don't know. It's yet to be seen how Bitcoin will react long-term to a stock market bear market and rising interest rates. You guys have any other opinions or thoughts on that?
I think I'll briefly say that while it would not surprise me to see a bigger correction this year in stocks, that correction broadly continue, even if we get rallies in between, it would not surprise me to see the NASDAQ in the year negative, and maybe even the S&P, who knows? But I do think this inflation worry is sort of reaching like peak fear. And maybe it'll get worse once we actually get one or two actual hikes from the Fed, like we saw like in the fall of 2018 when the market freaked out. But overall, I think the pendulum is quickly swinging the other direction, where it's almost going to get overly priced in, because, as much as we were concerned about inflation numbers rising, now there was a lag in the data. Now the data is actually showing it. There's also going to be a lag in the data if inflation starts to moderate. So we know that like the fiscal spending packages are, they've been a big tailwind for inflation, but those are starting to roll off this year. Doesn't look like we're going to get another 2 trillion Build Back Better plan, TBD on that, but it seems less likely as the days go by. And, we could have some of the supply chain issues start to slowly work themselves out, which means maybe shipping prices come down, maybe energy prices take a little bit of a pause at some point this year. So all of that could actually mean that we have a moderating inflation story as we get into the later parts of the year. And then it's going to look really silly for all the people that are all of a sudden, new to this whole trade about, higher inflation and higher interest rates. It's like they missed it on the front end, and they're probably going to be freaking out too much about it on the back end, is my guess. And the truth will be somewhere in the middle. So like you, I think we could get a really interesting opportunity if the market does get overly pessimistic about inflation to actually fade the inflation trade and to actually take some positions in areas where, the market has all of a sudden become too consensus bearish. So that's what I'll be looking for.
Man, that's, I think, a very 4D chess type thinking. Nick, what about you?
Yeah, I'm totally with that. I am not a believer of overcorrecting. I think that there are a lot of unknowns, but it does seem like we are coming to the peak of all of this madness. And markets don't react right away, right? Markets lag. The market hasn't been very quick on its feet, even though it knew that rates were going to be rising, even though it knew inflation was rising, and the market's been reacting slowly. So I think that that's going to happen the exact same way as inflation starts to improve. And I agree, inflation eventually is going to get better. However, I think Travis, let me know if I'm wrong on this. I think we foresee elevated levels of inflation compared to history. That's going to be a thing. But like we said, you can't undo wage increases. You can't undo certain price increases, and that's going to stick. And so we need to anticipate that. But I think getting overly bearish about this is the wrong move. I think going all in energies and financials is the wrong move. I still think that people should have some growth in the portfolio, growth at a reasonable price, some Bitcoin in the portfolio, take advantage of these sell-offs. These are absolutely opportunities because the world is not going to stop. Now, the other thing to consider here is internationally, look, the S&P companies make a lot of money from international markets. And internationally, we still haven't seen a full recovery there. So you have to also consider what's going to happen when that starts to occur, when countries start to reopen for good and officially, and Americans start to travel a lot more. And I also think that there could be a play, in some of the travel stocks in the future here. So I think that we have to remember that the whole world is not fully open. The whole world has not fully recovered, and we still have a lot of stuff to see going forward. So don't go too far in one direction or the other. And I think that that's going to be the best strategy. Everyone's so hung up on, how do I invest for this inflation? How do I invest for, rising interest rates and all of that? And I just think overcorrecting is a mistake right now.
That's a great point. I with you in thinking that we're probably going to get a fairly rip-roaring global economy this year with, potentially once we get past the near-term, spike in COVID cases, which has been off the charts, obviously. We know personally a lot of people that have gotten it just in the past month, but once we get past that, we could very quickly be in a situation where a significant portion of the world has either recently had it or, is fairly well protected via vaccines, potentially, arguments on both sides there. But let's just say for a minute, we've got a lot of immunity one way or the other, and economies start to realize, we can't keep things locked down anymore. And I think by middle of this year, things could be very rip roaring in terms of consumer demand, especially on the services and travel side. We took a travel stock play recently, and that could mean that, maybe in the face of all this early bearishness at the beginning of the year, we might actually have a very strong consumer environment and maybe even a very rip roaring market by middle to late part of this year. So I agree. It's maybe not time to do anything drastic. We like to have some energy exposure still. We like to have, some value stock exposure, but we also like to have those those growth at a reasonable price stocks where those companies can still grow 20 or 30%. What's the best way to beat inflation? Well, if you can grow and maintain your margins and you don't have to raise capital, then if you're growing 20 or 30% a year, that's a pretty good way to beat inflation too. So good perspectives. Good perspectives, Nikki. I like that.
Awesome.
Yeah, hopefully this Omicron wave is the parabolic blow off top of the whole COVID pandemic. And we talked last year about all the pent up demand for travel and how we were hoping that things were going to get back to quote unquote normal. And, obviously this last wave kind of threw a wrench in, but it looks like this could be the end. I don't want to make any predictions, but, based on a lot of the smart people that I follow that aren't, crazy conspiracy side or, cover your eyes and just follow what the government says, right? There is a middle path there. And based on what I've seen, I'm optimistic that this year things will hopefully, fingers crossed, get back to normal. I don't know. What do you guys think?
I sure as hell hope so.
Yeah. I know we're jonesing to travel outside of the United States. That's for sure.
Yep. Yeah. Domestic travel's been crazy. I mean, all of the, at least it feels like all the, like ski resorts and everything domestically is like fully booked. But I know, a lot of countries are still closed, Japan and, quarantines in Asia and parts of Europe. And I don't know, I'll be really happy when that is back to normal and we can start freely flowing around the world. Hey, I wanted to ask you guys something. What do you think about Congress members trading the stock market? I know some people may have seen Nancy Pelosi's remarks on this, where she thinks that Congress members should be able to participate in the quote unquote free market. And when I take a look at this and how many hedge funds was it last year that actually outperformed the S&P? It was like a handful, right?
Barely
but when you look at when you look at the amount of Congress people that outperform the SPY, it's like, maybe there is an edge to being an insider and being able to make trades when you know what policy decisions are coming down the pipeline. What do you guys think of this? Is it fair? Is it bullshit?
I'm glad a brighter light is being shined on this, because I've actually read academic papers that were written 5 or 10 years ago that about this very topic, that Congress people seem to have better results than the average, mutual fund or average hedge fund or even average individual. And a lot of that is because they get inside information. They are trading on inside information in some cases, not every case, but in some cases they're trading on inside information. And their access, obviously, as well to Fed officials and to economic policy makers and things like that. So I'm glad a brighter light is being shown on this, because it is just yet another example of how those at the top are trying to win and play an unfair game versus the rest of the society. So it's funny, but it's also rather infuriating, and it continues to go on. And I'm fairly pessimistic on legislation ever passing that would ban this, because again, who makes the laws? The people that are doing the insider trading. So what you're saying is, Trav, is
for our own portfolios, we need to get into politics. Let's hop on the crony capitalism bandwagon, man. Let's do it. And then what we'll do is we'll start a fund called like Congress Fund or something. And we'll, I don't know. Well, there's got to be a loophole there some way that we can do it.
Yeah. Well, now
this is like a corporate benefit at this point for them. It's like a benefit at your job, it's crazy.
Yeah. I do like that now we've got some websites and services that are tracking or trying to track these Congress people's trades in near real time, not obviously totally real time, because I think these disclosures can be like a week or two delayed, but at least now we've got some services that are trying to track these trades. And there's like the Nancy Pelosi tracker that's out there now, and some great memes obviously coming out of it too. But we'll see if maybe the public can actually use some of these signals to make money alongside these people. But fairly infuriating overall, I guess you could say.
Yeah. Oh, and by the way, the Nancy Pelosi tracker on Twitter got banned for some reason. I remember seeing this.
Mm-hmm.
I don't know what happened. I don't know if it's back or whatever, but I saw that it got suspended or blocked, or something.
Oh,
Well,
ironic.
Let's see. Is it
yeah,
back?
Twitter's going to have
There's a whole bunch of like copycat ones popping up. I don't know.
Twitter's going to have to play a never ending game of whack-a-mole, hopefully on that. And, hopefully the people win out on that. I don't know why Twitter would ban that. Unless that account was, tweeting conspiracies or something or false information, but I'm sure Nancy may have had a say in that.
Oh yeah. I'm sure
Oh
she's
my
got
God.
Jack on speed dial.
That's right.
Right.
And yet we're over here.
Right.
Normal folk are over here. We can't get Twitter support to help with imposter accounts, right?
Impersonators. Yeah.
Yep.
This is, and they wonder why, people hate the politics of big tech, and they wonder why there's all these services popping up that are trying to, decentralize and win against platforms like that, right? I mean, at some point you shoot your own self in the foot. So,
yep, absolutely. Well, look, we've got a few questions and then we can start to wrap it up here. Magic was asking, how do you build wealth while maintaining a life? I've seen this a lot where people just go head first into the markets, and next thing you know, you're sitting in front of your computer for 20 hours a day and just obsessing. And I think it can be good to try to learn everything you can, but I've also seen it completely take over people's lives and it becomes an obsession. So do you guys have any tips for how to build wealth and how to maximize opportunity, but also maintain some kind of balance there in your life?
I want to take this because I'm kind of seeing the question in a different way. I'm seeing it as like, how do you financially take money and put it towards building wealth via investing while also having money to have fun and do things that you enjoy? And so I think that, that's a question a lot of people have is, look, I want to get wealthy, but I also want to go shopping at Lululemon and go on vacations. You know what I mean? So I think that there is a way to find a balance between making sure you are putting away enough. And I think a lot of it and enjoying life. And I think a lot of it comes down to what visibility do you actually have into your finances. Believe it or not, a lot of people do not track their net worth. They do not track their cash flow. They do not know how much money's coming in and going out and what they have left over to, allocate to certain important things like investing and going on your vacation. So I think a lot of this stems from getting visibility into your finances first. Know exactly you have to prioritize, right? There are sacrifices that you have to make to some degree to build wealth. I think we've all been there at some point, all three of us probably, where we've had to, make those sacrifices in one way or another. But there is a way to find balance. And I think that stems from visibility and knowing what you have and knowing what you need to reach your retirement goals. Or I'm replacing the word retirement with a new word. I'm replacing retirement with chill out, because like people don't like to think about the word retirement. But if you think of it as like, hey, when can I start to chill out in my life? Like maybe people will be more motivated to want to, work towards that chill out goal. Anywho, that's my
chill-tirement.
I love that. That's awesome.
Yeah.
We're gonna help you push that. I love that. That's a great way to conceptualize it. I'm the wrong person.
Yeah, I mean, that's really what the FIRE community is all about, right? Is like financial independence, retire early, like, those two kind of go hand in hand. But really the goal is like, you just don't want to work a job that you hate or feel like you're constantly in hustle mode. And, I know there's been a lot of like hustle porn in the American community with guys like Gary Vee and some of these others that are really just pushing, like, you got to work yourself to the bone. And I'm not speaking badly about that, but there does have to be balance, and there has to be, a sense of just like, what am I doing this for? Right. Cause you don't want to burn up your early years and have no fun. And then you make it to be 70 years old and you're like, wow, now I can finally chill. Right. There's gotta be a semblance of balance there. And I think it's easier to do now than in any time in history. Right. Like we have access to the internet. You can work wherever you want. There's endless opportunity. Like there's really no excuse to work a job that you hate anymore. And maybe that's what this great resignation, this, millions of people quitting their job is, a lot of people waking up and saying, I'm not going to take this shit anymore. I want to design a life that makes me happy, or that, gives me the money that I can, that I feel like I deserve, and that I can live on and live a great life. Trav, what do you think?
Yeah, well, I'm probably the wrong person to ask about how to balance, because I'm obsessed with markets and obsessed with investing. So I spend way more time than a normal person does or should. But I do think one way to frame this is, maybe I think about working hard in spurts. And so like there are time periods in my life, or even within a given year, where I'll spend a ton of time focused on markets and trying to find ideas and on research. And then there will be, weeks at a time, or maybe even longer occasionally, where I unplug from markets, or maybe I'm less plugged into what's going on. And so I kind of give myself a break and do other things, or focus on other things. So I think maybe that's one way for some people to approach it, is you don't have to always be 100% tuned into markets. Yes, if you go away for 2 months, you're probably going to need some time when you get back to really ramp back up on what has been going on, and to get a better insight into, markets, and maybe trying to find that edge again. But that's okay. It's okay to be, it's okay, especially in quieter market times, to go away for a while, or take some vacation, or to focus on other stuff, go learn how to play a sport, or hit the gym, go learn chess, whatever it is, so that's how I think about it, is you can do it in spurts. In my early 20s, for a couple of years, right around the financial crisis, and for maybe 2 or 3 years after that, I worked like a dog. But then, I kind of eased up a little bit, maybe once that period subsided a little bit, because I had been able to capture some of the rewards from that work. And then, maybe that picked up again, in recent years, when we had COVID sell-off, 2018 sell-off, what's going on now. So I think that there's ways to kind of ebb and flow with not only market cycles, but what's going on in your own life.
Yeah. Totally agree. And one thing I'll also say to Nikki's point about, how do you know, like, okay, I want to save for retirement, I want to invest, but I also want to spend money now and have a good life now. The way I think about it is, like, if you're looking at a purchase, anything as small as some Lululemon pants, or something as big as a boat, right? If you look at that money and you say, okay, well, what if I invest this, what could that money turn into in 10, 20, 30 years or whatever? And then look at that amount. So maybe multiply it by 4. So if it's $100 pair of pants, say that could be $400 or $500 in the future. Right. Or if it's $100,000 boat, okay, that's $500,000 by the time I retire. Right. Take that and say, well, is it worth the sacrifice of that future gain now? Right. Where it's like, yeah, I want the pants now, or yeah, I want the boat now, and I'm willing to give up those future returns at some level. Right. So as long as you've had your basic financial needs met, and you've got your emergency fund, and you've got investments going, maybe you can get to a point where you're like, yeah, I can live it up. I can have that coffee, right? Like, how many times have we seen a lot of the old school, like, financial gurus saying, oh, you cannot have the damn coffee. You've got to sacrifice. You've got to live on a minimalist budget. You've got to suffer now, right? No, there's a middle path there. There's a way to enjoy life and have like a rich life now, while also being financially responsible and planning for the future, right? It doesn't have to be all or nothing.
Yeah, I think too many people are afraid to treat themselves when they're kind of on that journey. And I am of the mindset that it's important to reward yourself as you reach goals. So like, hey, you just maxed out your IRA account or your 401k. Awesome. Don't be afraid to go on that vacation and treat yourself a little bit and live it up. I think that that's just an important thing along the way to help keep you motivated to want to keep building wealth.
Absolutely. All right. Next question. Johanna was asking, where should I focus my investing? In the stock market, in an IRA, in my 457B, whatever that is. Nick, you can educate us on that. But where should she focus her investing?
Yeah, a lot of people have this question because many people work for corporations, or maybe they work for themselves and they have a solo 401k or a SEP IRA or something. But a 457B is a retirement plan. Usually government workers get these types of plans, and they are tricky. They have benefits, but they are tricky because they can have very high high fee investment options. And so what that means is you may be stuck in something like an expensive annuity in your 457B. You may be stuck with expensive mutual funds. So when you're looking at, okay, how do I allocate my money? Where do I put it if I have all of these options? I have a 457B or a 401k. I have an IRA that's a personal IRA at my brokerage. I have a taxable brokerage account. I have all these things. What do I do? Well, I think that's where you have to look at what are the investment options available to me? Are they good? Are they reasonable? Are they low cost? Because if they're not, and that 457 has really terrible options for you, or they're making you just buy an annuity in your 457B, then that's where you could say, okay, I want to have more control over what I'm investing in. So I'm going to allocate my money to my IRA or my taxable account, or, there are ways to strategize that in way more detail than I can explain in this moment. But I think that's the first step to do is figure out what investment options you have and how expensive are those investment options, particularly with something like a 457B or a 401k or even a 403B.
Nice. All right. Last question, Trav. I'm going to give this one to you. What do you think about the implications of crypto and central bank digital currencies are in our society? That's a really broad question, so we could probably tackle this from a couple of different ways. And obviously, I have an opinion on it, but I want to know what your opinion is. What do you think of the implications of central bank digital currencies? Are they going to win? Are they going to lose? How's that going to affect regulation? Do you have any thoughts there?
Yeah, I think we've talked about it a few times on a few different shows, and we could probably devote an entire episode to it. But I think CBDCs are inevitable in many cases in many developed countries. It's only a matter of time before they're implemented, and there's not a whole lot your average citizen could probably do to stop it from happening. But, there's going to be positives and negatives there. On the positive side, I've talked about the ability for governments at some point to maybe encode monetary policy rules onto a blockchain or via the CBDC. So, if everybody's worried about the Fed changing their subjective opinions about how much money should be printed in a given situation, well, maybe instead we come up with a set of rules that people vote on and say, well, okay, in the case of a recession, we're willing to print up to 10% fiscal deficits. In normal times where we're not in recession, it has a limit of 1% to 2% or population growth or whatever that is, right? And so that would help to, especially in certain countries, maybe contain this desire by central governments to print too much money and really start to basically disrupt the economy and the money supply, right? So that's a positive thing. I think CBDCs could actually play a positive role in monetary policy. On the flip side, you've got, these negative situations like you have developing in countries like China, where you've got the negative, social credit scoring system, where it could actually be implemented where they may take currency from your bank account, or they may try to adjust your spending power via CBDC controls, right? So that's the scary negative downside case. And my guess is we're probably for a number of years going to have that middle ground where some of these CBDCs come out early, countries test them out. They don't really become a mainstream part of, the economic piping, so to speak, but they play a very minor role and don't actually change a whole lot, in the short run. That's probably the base case expectation that I have in most countries like the, US, where you do have a democratic system. So TBD, it's going to be really interesting. I think there's positives and negatives. I think ultimately it's somewhat inevitable that they will probably play a role just because of how much our entire financial system and monetary system is being digitized. And I think there's a lot of desire by governments to want to use CBDCs to quickly implement fiscal and monetary policy. Imagine we had this March 2020 crisis, and instead of sending out physical checks, they could just tweak your balances on an app immediately. That again could be a positive, but the ability to reverse that again, a very scary negative. So I have yet to fully make up my mind on if this is a net positive or a net negative, but I think inevitably we're going to see development happen on these CBDCs. And I doubt it's going to be that dramatic in most countries outside of China in the near term. But this is something we're going to have to continue to talk about and evaluate over the next decade or two.
Yeah. I don't think my opinion's changed since we've done some deep dives over the past couple of years. Like, I think net, whether they're good or bad for society is yet to be seen, like you said. But I think ultimately it's going to bring just more awareness to Bitcoin and be a net positive for Bitcoin, because central bank digital currencies are going to point out like, oh yeah, here's some of the tech benefits to having a digital fiat currency, but Bitcoin is better. Right? It's like, yeah, you can drop a few bucks in my digital wallet, but there's also increased surveillance. There's also the ability for you to just take everything I own if somebody at the IRS doesn't like you, right? Like there's weird things like that could happen. So people are, I think, going to look at those and go, oh, okay, if governments are saying that digital currencies are valid and useful and valuable, then that gives more weight to Bitcoin's selling points, right? The decentralized nature, the need to not even have a government in that mix, right? I think it's just going to bring more awareness to that. So yeah, I think there's going to be some ups and downs and some really weird shit that happens with central bank digital currencies. But at the end of the day, I think Bitcoin's going to win. In the short term, I think there's going to be more regulation over stable coins, because that is a competitor for CBDCs, right? And I think governments aren't going to really want to have that power in the hands of, Coinbase or Binance or Bitfinex or whoever is basically controlling these stable coins. They're going to want to be the stable coin, right? But ultimately the store of value is where the winning store of value is going to be what people look at and trust the most. And I think, governments come and go over long enough time spans. Fiat currencies come and go over long enough time spans, but decentralized currencies that are not controlled by a government, I think, are going to win in the long term. So I don't know. We'll see. Like you said, it's a multi-decade question. It's going to be a roller coaster of a ride. And I think we're just getting started. So
power to the people, baby. I actually very much agree and align with your views there, that I think ultimately there has to be a role for something like Bitcoin that is decentralized and not tied to any specific government. And the benefits there should be plainly obvious to most people. That is something that is probably going to be a positive force in a lot of cases for many, many years to come, hopefully.
Yep. Well said. All right, guys. Well, I think we can go ahead and wrap it up there. Let's see. Let's do some calls to action. Go to wetalkmoney.com, submit a question for the show. And if you want to join us in our investor community, go to wetalkmoney.com/community, and you can hop in our Discord channel, come to our live classes, all that good stuff. And yeah, we'll look forward to seeing you guys soon. Got some exciting things in the pipeline. And anything you guys want to end with?
Stay safe out there. Don't get too overwhelmed with these markets and this selling. Keep your head straight. Keep that mental state strong. This is when the money's made, y'all.
Hear, hear.
Awesome.
Cheers to that.
All right. Well, thanks for joining me, guys. Thanks for watching or listening to this. We're also on audio podcast. We upload the audio to anywhere you can get a podcast download, and subscribe to the channel. Share this with anybody you think would get value, and we'll see you guys next time. Take care.